So can you just start off, Ben, by telling us a little bit about how you got involved in the tyre industry side of things?
Yeah, so it goes back to I worked for a business that was acquired by Marsh Commercial, and before we were acquired, we bought a business in Shrewsbury who had a long history with tyres going back to the 1980s. At the time, there was some issues regards to the product liability for tyres being imported from China. So they developed a scheme specifically around products liability that would give them the cover they needed whilst importing tyres from that region. The company I worked for at the time was very much into the haulage industry, and when we began talking to clients, we found that many of their risks were similar in terms of distribution, road risks with the vehicles on the road, employers' liability claims due to obviously the high risk nature of both distribution, but also in terms of the tyre fitting side of the business. And we'd already developed some claims management procedures around those disciplines that we knew could be easily transferable. So we effectively transferred our proposition from the haulage industry into the tyre sector, and we found that as we started talking to tyre businesses, what we'd got was exactly what they wanted, but mainly they hadn't been spoken to about that because I think there was an assumption around that their risks were mainly around retail rather than actually the breakdown and recovery side of which a lot of tyre fitters do.
Mm-hmm. So yeah, I was going to ask a little bit about the different areas of risk and the different areas of insurance provision, but before we get on to that, what would you say is the most pressing need for insurance in the tyre sector right now?
Yeah, so the two main areas are road risks. So the vans that are out on the road that are obviously traveling a lot of miles, they have to get somewhere in a short space of time, be it whether they are a wholesaler getting tyres to a retail depot, or whether they are a breakdown business getting out to a haulier who's stranded on the side of the road with a burst tyre. So the road risk side is where we see the main traffic in terms of claims. That is where we probably get the highest frequency of claims. Where we obviously get the highest severity, that would be under employers' liability for a serious injury to a member of the wage roll, or then we've then got maybe a serious fire claim for maybe a tyre warehouse per se. Yeah, they're the high impact claims.
Yeah, fire risk is one that has been covered, particularly in the recycling side of the business, in some detail before. Is that still as serious in the other parts of the industry, in wholesale and distribution?
Yeah, so the inception hazard isn't as high in the wholesale side because where we've seen fire claims coming from the recycling side was really when they're chopping up tyres. You have the metal within the rubber that can spark, and then that starts up a fire. The tyres on a recycling site aren't as new, so they're a little bit more likely to set alight than maybe a brand new tyre. So we don't see as many tyre fires on the wholesaling side, but obviously the severity is there that if there is a fire, maybe a forklift truck is being left to charge overnight and there's a burnout, then we could see a fire coming from there. So that's where we generally see the tyre fires come from. The inception hazard is different in recycling than it is with wholesale.
Do you see that complexity increasing as we move towards electric vehicles and the number of batteries in warehouses and things like that increases?
Yes, I would imagine so. Yeah, we're going to see that, particularly as the technology gathers pace and there's less understanding over the technology, particularly in the interim period. I'd imagine once the electric vehicles are much more common, we're probably going to build some risk management strategies around that. But at the moment, it's difficult because they're not so common, are they? They're the exception rather than the rule.
Yeah, very much so. Registration figures show that electric vehicle take-up is growing fast, but from a very, very small base. So how does COVID-19 and the effect of lockdown, how does that affect risk and insurance needs?
Yeah, so we've been talking to insurers about this because as cases come obviously due for renewal, and we're trading with insurers, and we're sort of saying the risk is improving. I know they have some concerns over particularly, immediately during lockdown, was that they were seeing more cyclists on the road. And obviously with vans and HGVs delivering tyres, they were concerned about those high impact claims in terms of the cyclists. So that was one of the main things through COVID, which we saw. The other impact I think on COVID, which we'll have down the line, will be maybe an increase in employers' liability claims. Largely due to when money gets tight, we tend to see more of those claims, and also we tend to see more claims through crime when obviously recession hits. I think that's going to be the biggest fallout from COVID, will be as the household budgets get tightened, we tend to see more crime and employers' liability claims.
And not the actual condition itself, not COVID-19 itself, and risk assessments associated with that.
Yeah, I mean, that's a difficult one for me to answer at the moment, because we're still in this, aren't we? And we'll see those claims come. Certainly, we've been given a lot of advice around companies risk assessing, and I know a lot of our tyre clients have commented on that. They've been on our website, they've pulled off the risk assessments, they've developed their own risk assessments around those, and that's to basically build claims defensibility for if and when we see those claims. I haven't seen any personally on my book of clients yet. I am aware of some some issues in terms of illnesses and things, but they're not where we see ourselves as being liable anyway.
So what tools, like you were just referring to a moment ago, what tools do you offer the trade to help prepare and have the right kind of provision?
Yeah, there's a whole suite of them on our website, and we've been communicating these since the beginning of lockdown, really. And we're running webcasts from managing your employees at home, those at home in terms of their mental health and mental wellness. Also, how to shield your employees away from each other, adequate safe distancing, all the sort of stuff we've seen, which has been well reported now. But there's pretty much topics on everything in terms of cyber risk, increasing profiling on that too. So yeah, it's mainly the risk assessments in terms of, say for example, a tyre fitter going onto an employee's site, the risk assessment around that and what they should do in terms of the social distancing angle.
Yeah, that was one of the questions I wanted to ask. You mentioned online there. The tyre business has become much more diverse over the last decade or so. So now we've got traditional bricks and mortar retail, which is essentially a garage-based business, but we've also got mobile tyre fitting, we've got the wholesale part of the business, and the manufacturing and distribution between wholesale as well. Importing side of the business, you talk about import liability, but of course online tyre retail as well. So they've all got slightly different issues. I'm wondering if you could just give us an insight into some of them.
Yeah, so certainly the mobile tyre fitting, the issues obviously around lone working. There's also concerns over fatigue if they're working alone for long periods. Often that's required, and it's actually something that's the tyre fitters want, so they can earn their overtime. So we have issues around that. Obviously using the right equipment when they're going on to site. Also, I think the roadside is obviously a major issue, which we're well aware of in terms of the React scheme, further complicated by live lanes on the smart motorways now, which obviously made it more difficult too. So again, that comes back to the risk assessments and the training that the companies are doing. And I think as a broker selling the risk into a difficult insurance marketplace at the moment, it's really key that we understand what defences are there, so that if we first and foremost to keep those employees safe, but so that if that employee maybe doesn't use the common sense that we would hope, that we do have a defence, particularly to help defend the business not only against a claim but also any corporate manslaughter or HSE fines, for example.
What about go on.
Yeah, they're the main issues. The road risk side, the importance for us is to capture the claim quickly, and to manage that claim as cheaply and as economically as possible, so that the vehicle gets back on the road quickly, but also if we're at fault, that the aggrieved party, their vehicle is repaired quickly and they get a courtesy vehicle and back on the road as soon as possible.
the last count, there was north of 200 different Chinese tyre brands on the market. I wonder if you've got any insight or advice about covering risk when it comes to importing foreign manufactured products.
Yeah, so the importance there is understanding the supply chain. So for us to understand where the tyres have come from, if we do get a product's liability claim, what recourse we have in terms of going back to that the Chinese supplier and passing the claim down the line to those. I know insurers are very nervous about that in terms of how strong their prospects of recovery are. So it's something we work with clients on a lot, trying to get evidence of their own insurance from the supply chain so we can pass that claim back down quickly.
Yeah, and also one of the other side effects of lockdown has been an increased take-up of online tyre business. So obviously people are doing more pre-sale research than ever before, but they're also going through the whole purchase process more online. I suppose that leaves questions of risk relating to cyber fraud and cybercrime.
Yeah, absolutely. The protection of the customer's data is key. Clearly, sometimes with things like cyber, prevention is far better than the cure, and the insurance product is really there to act as a recovery mechanism once the issue has happened. But I think with cyber, my first advice to a client would be to get your protections in place first and foremost, because if it becomes an insurance claim, then the likelihood is you've got to make a representation to the Information Commission. Things are going to be getting quite serious by that point. So I know a lot of clients are going down the Cyber Essentials route. They're getting that accreditation so they can ensure that they've got best practice in place. And then once they've done that, we then look to wrap an insurance policy around the client after that, so that if those protections don't work, then the insurance policy is there to meet the costs in presenting that report to the Information Commission, any regulatory charges, any business interruption as a result of the systems going down, extortion, or the other areas which a cyber policy can pick up. But more and more now, the conversation starts with, can we just do a risk assessment first and foremost to understand what protections we need to put in place first and what procedures we need to put in place.
Just stepping back to the mobile tyre fitting side of things, I heard you mention the React scheme, which of course has been developed with the National Tyre Distributors Association, the NTDA. I know you've also put together some insurance programs with the NTDA. So I wonder if you could tell us a little bit more about those. Yeah,
so really the insurance market is very restricted for tyre fitters. So it's important to ensure that we present our clients in the best possible light to the insurance market. And where we've had a lot of success with the NTDA is that I think the NTDA have been really, really proactive with what they've been doing in terms of working with the number of the tyre manufacturers, understanding what good looks like, and then working with their members to ensure that they are working towards a standard. Mm-hmm. So where we've really won with some insurers is that we've held meetings with insurers, and we've actually explained to them what a good tyre risk can look like, and it very much mirrors what the NTDA have done. So by us attending regular briefings, by having a close relationship with the NTDA, we can always ensure that when we're selling the risk through to the insurer and telling them what the clients are doing, that the insurer understands the risk and then they rate accordingly, and they don't just lump them in with every tyre fitter in the UK who perhaps isn't dotting their I's and crossing their T's from a compliance perspective.
So when it comes to organising your corporate insurance for your tyre business, what would you say is the best approach? Is it a question of looking around the market and finding your own portfolio of solutions, or would it be better to work with a particular partner that can do that with you?
Yeah, so this is a question we get asked a lot, not just about tyres, but actually about a number of different trades. Those trades that are difficult, that don't have 20 insurers to go to. Those trades that maybe have 3 or 4 insurers that fit their risk profile. And I think really, if you're a business that's serious about addressing your risk management requirements, that's actually cares about how your business is presented to the insurer, it's probably sensible to partner with a broker that has some understanding of that industry first and foremost. Because if an insurer receives 2 or maybe 3 presentations of the same client but with differing information on it, it makes it very complicated for them to really understand that risk. So we've developed some profiles with the insurers on what information they want to see, and then through that we're then able to talk that through with the client, get their sign off before the presentation even goes to the market, because really you've got probably one chance to go to the market and get the right deal. So it's important to use that chance wisely, to pick your moment.
Do you have any other top tips for those looking to upgrade their insurance in the market?
Yes, certainly start the process very early. We're starting the renewal process now, probably 4 months out, in terms of building a strategy with that client, in terms of getting the right information, reaching down into their insurance team. So not just talking to the financial director and getting an updated list of sums insured. It's really meeting with the health and safety manager, meeting with the transport manager, engaging with ops, all those key stakeholders to really get the risk profile right before it goes out. And that can take a minimum of 3 months. And people often laugh at me and say it's not going to take 4 months, but believe it or not, we're all even busier than ever, aren't we? And getting hold of the right people can take weeks, and getting the right meeting set up. So yeah, certainly start the process 4 months out, and also look to consider ways where you can improve your risk from month 1 until you get to 4 months out. So if you're 8 months, 9 months from renewal, just think about what training you've been doing. Have a look at your claims history, see how it looks, see if there's areas where you can have some easy wins, some quick wins to improve that claim experience. Address driver performance, the cameras in the vehicles, all those things which will contribute towards an improving claims experience towards renewal. Look at those now, don't wait until your renewal date, because it will be too late.
Excellent. Okay, thank you very much for your time. Thanks for joining us this afternoon. I think there's a lot there for people in the industry to consider and to work through. We managed to cover quite a few different aspects of the business there, but most of all, thank you very much for your time. Ben Harrison, Vice President of Marsh Commercial.
Thanks, Chris.